All 3 to 4 problems are your question paper problems. So which topic we are doing? Incidence of tax. Anything which is earned in India, always taxable in India itself. Compute the gross total income if he is a resident, not ordinarily resident. Hello everyone, I am your ALsir, lecturer in Vidhyaashram First Grade College, the Temple of Excellence. So, we are in the session 6 of your topic called Income Tax 1. As I told you, the easiest part is started. Now, in the previous session, we done with 2 problems with concepts. Now, it is just extension of your same topic, but we will learn more in this. And as I told you, whatever problems we are discussing, almost 3 to 4 problems we will work out. But all 3 to 4 problems are your question paper problems. So that you can expect the same kind of questions in your examination. Now, we'll move to your problem number 1. Before that, what is your agenda? So, which topic we are doing? Incidence of tax. In that, we are doing problems. Now, this will be your problem number 1 for the day. So, in the previous session, we completed 2 problems. Now, we are in the session 6 and we are doing problem number 4 or problem number 3. Now, Sri Hanuman Prasad has the following income for the previous year ending on 31st March 2020. Now, out of this, income from salary in India from a company computed. Now, income from salary in India. Remember, as I told you, anything which is received in India, anything which is earned in India, always taxable in India itself. All 3 cases taxable, taxable, taxable. Simple? Yes. Next. Income from house property in India. So, where is your house property? In India. Received in Pakistan. You may receive Pakistan wherever it may be. But where is your house? In India. So, taxable, taxable, taxable. Simple. Your property is in India, taxable for all 3. If you are received in India, taxable for all 3. Easy. Now, we'll go for the third one. Dividend from foreign company. Remember, if dividend from Indian company, it is exempt for all. But dividend from foreign company, it has to be taxable by the first person. We'll go for the answer later. Next. Income from business in Kolkata. Where is Kolkata? In India. So, where is your business? In India. So, taxable, taxable, taxable. The simple logic is, in the question, if you find the word received in India, don't read further. Taxable, taxable, taxable for all 3. In the question, if you find earned in India or the business is in India, then it is nothing but earned in India. So, taxable, taxable as well as taxable. Managed from USA. We don't want managed from USA and all because income from business in Kolkata. This is important for us. In Kolkata means earned in Kolkata. Maybe received somewhere where it is earned in Kolkata means in India. Now, income from business in USA controlled from Kanpur. Remember, if you find the word called controlled, taxable, taxable, non-taxable. Only 2 persons are taxable and the third person, non-resident, is not taxable. If you find received also outside, controlled, earned also outside, but controlled where? In India. In India, it is controlled means first 2 persons are taxable. Clear? We'll go to your answer. Before that, just I am giving you basic idea. Now, Income was earned in Australia. Earned where? Australia. Received there. Received also there. But bought into India. So first person is taxable. Then his maternal uncle sent a bank draft from France as gift. Remember, if you receive any gift from your relatives, completely exempted. Again, I'll repeat. If you are received any gift from your relatives, is completely exempted. Now, again, if you received income on occasion of marriage, exempted. Again, I'll repeat. Gift from relatives on occasion of marriage and from outsiders up to 50,000. So these three exempted. So remember, any gift received from outsiders up to 50,000 exempt. Any gift received from your blood relatives is completely exempt. Any gift received on occasion of marriage, even though it is from your relatives or even though it is from outsiders, on occasion of marriage, whatever may be the amount you received, it is completely exempted. Now, as per this, his maternal uncle, blood relative, sent a bank draft from France worth rupees how much? 20. Blood relative exempt. Below 50,000 exempt. So, and again on occasion of marriage. On occasion of marriage also exempted. All three things included in this point itself. Clear? Yes. So, this is all about your question. We'll see how to solve this answer. Now, compute the gross total income if he is a resident, not ordinarily resident, and non-resident. Now, income taxable on the basis of residential status. So, on the basis of residential status, how much income is taxable for each? Now, so everything we have discussed, but we will cross-check once in this. Income from salary in India, as per this, taxable, taxable and taxable. All the three cases we call it as taxable. Why it is taxable? As I told you, income from salary in India. Anything which is in India, it is always taxable. First one is over. We'll go for the second one. Dividend from Indian company. If it is a foreign company, it is taxable. If dividend from Indian company, then it is exempt, exempt, exempt. So all the three cases exempt. Now, I'll go back to question. So, dividend from Indian company. So, Indian company, so it is exempted. Now, third one, income from house property in India. If you find the word in India, so irrespective of further information, taxable, taxable, taxable. Whatever amount mentioned in the question, copy paste for all three. Next, dividend from foreign company received in England. As I told you, any dividend from foreign company, first person will be considered as taxable. First person is considered as taxable. Then for the second person, nil and nil. It is not taxable. We'll go for the next one. Income from business in Kolkata. Where is your Kolkata? Kolkata is in India. So, taxable, taxable, taxable. It is easy or very easy? Very easy. Now, income from business in USA. Now, but controlled, the word is what? Controlled. If the word controlled comes, means how many persons are taxable? 2 persons are taxable. Now, first person 12,000 and second person also 12,000. Clear? Yes. Now, we'll come to next one. Income earned in Australia but brought to India. So, only first person is taxable. Second and third person are not taxable. Why? Because it is earned in Australia. Received also Australia. Now, that's why only first person, because he is a resident, everything is taxable for him. Next. Gift from maternal uncle, not taxable. As I told you, on occasion of marriage, exempt. Any gift from your relatives, exempt. Any gift from outsiders up to 50,000, exempt. As per that, in this also, any gift received, it is taxable or exempt? Yes, it is always exempt. Now, so all the three are done. Your residential resident, not ordinary resident, as well as non-resident. Everything is done. Now you have to add up this. So it will be 70,000, 80, 1 lakh, 1 lakh 12, 1 lakh 37,000. This is done. We'll go to next one. 50 plus 20, 70,000, plus 20, 90,000, plus 12, it will be 1 lakh 2,000. So second one also done. We'll go for the third one. 50 plus 20, 70, plus 20, it will be 90,000. Now, how your marks allotted in your examination? So how many entries are there? 1, 2, 3, 4, 5, 6, 7 and 8. How many entries are there total? 8 entries. Each entry will carry 1 mark. How many marks you will get? Each entry will carry 1 mark. So 1 into 8. How much? 8 marks. Whatever columns you have done, the heading and your inner column headings, everything will carry 1 mark. Then your final total 1,37,000, 1,02,000 and 90,000. Together it will come 10 marks. So what is the total marks weightage? Total marks weightage is 10 marks. The 10 marks will be allotted like this. If the entries are more, means your marks will be more. Like it may come for 15 marks also. If they have given 10 entries or 12 entries, then this question for 15 marks. Now, as per this, this is your complete 10 marks exam question. Please take screenshot of this so that you can do it later. I'll show you the question as well as answer. So this will be your problem, and these are the information what you are supposed to calculate. This is the answer for the particular question. So we'll go to the next question, so that the last question will give you as homework. So this we will only work out. Now, interest on saving bank deposit in Allahabad, Delhi. So Delhi, where it is? In India or outside? In India. Taxable for whom? All three taxable, taxable, taxable. All three taxable, taxable, taxable. Next, income from agriculture in Africa. See, agriculture land is where? In India or Africa? Africa. Invested in Nepal. Again, we'll come back for this. So, Africa they have given. So, Africa means what? Only first person is taxable. First person taxable. For the next 2%, it is not taxable. Then, dividend received in UK from an American company. Whether it is Indian or American? American. If it is an Indian company, means what will happen? It is exempted. But it is a foreign company, so it is taxable, exempt and exempt. Now, next. Out of which rupees 2,000 was remitted in India. We'll do that calculation in the answer. Next. Income from salary for the 3 months for working in India. Anything which is received in India, taxable, taxable and taxable. Next, embassy office in Australia and salary received there. We'll do those calculation later. Income from house property. The building is situated in Pakistan. Only first person will be taxable. Next, out of which 10,000 deposited in the Bank of Pakistan and the balance remitted in India. We'll do that calculation. Next, pension income in Belgium for services rendered in India with a limited company. How much it is? 20,000. So few things are new concepts. Those new concepts, while doing your solution, I'll explain you. So which are the things we know? We explained here itself. The rest of the things will understand while doing the answer. Now, in this, compute the gross total income if he is resident, not ordinary resident, and the last one is non-resident. Now, how to do this? Very simple. Income taxable on the basis of residential status. Now, in this, the first thing is particular resident, not ordinary resident, and non-resident. In this, interest on saving bank deposit, what we should do? So, taxable, 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 because it is in India. Next, income from agriculture in Africa. As I told you, if it is in India, exempted. If it is in Africa, first person is taxable, nil and nil. We'll go to next one. Dividend received in UK. Similarly, it is received where? UK. So, first person taxable, second person nil, and third person nil. I'll go back to this question. Dividend received in UK from American company. Next, out of which 2000 was remitted in India. This is not required because if it is received in Africa means only one person is taxable, remaining two not taxable. Next, income from salary for working in Indian embassy in Australia. So income earned where? Even though it is received in Australia but earned from Indian embassy. So it is nothing but taxable for all the three cases. So income from salary for working in India embassy in Australia. So all the three cases it is taxable. Next, income from house property in Pakistan. Income from house property in Pakistan, it is very simple. As I told you, any agricultural land, house property, any other income received outside India, only first person will be called as taxable. Remaining 2% will be exempted. So, these are the cases we have. Next one, pension income in Belgium for services rendered in India. Again, so services rendered where? In India. 20,000, 20,000 as well as 20,000. Taxable where? In India or outside? In India. Why? Because pension income in Belgium for service rendered in India. So if you find the word called service rendered in India, earned in India, business situated in India, then irrespective of collection, it is always taxable for all three. Now, so we have taken 20,000, 20,000 as well as 20,000. We'll add everything now. 10 plus 10, 20, 72, 92, plus 15, 1,07,000, plus 20, 127, and 128, 200. Then, similarly, 72 plus 20, it will be 92,000, plus 1,200, 93, 200. Next, 72 plus 20, it will be 92,000. 92 plus 1,200, it will be 93,200. This is all about this problem. Again, I'll go back to your question so that you can understand better. So, this will be your question. So these are the informations what you are supposed to prepare. This is your answer. Income taxable on the basis of residential status. This is your problem number 5. So we are in problem number 5. Last problem of the session. Easy. We'll do it this. Now, profit earned from business in Paris, which is controlled from India. So as I told you, if it is controlled from India, how many persons are taxable? Only 2 persons are taxable. But along with that, half of the profit being received in India. So 1,60,000 for the first person, 1,60,000 for the second person. Third person, it will not come only. Why? Because controlled in India, only 2 persons only taxable. But as per this, half being received in India, then what will happen? Last person will consider only half. Normally it will not come. Why? Because it is controlled in India. But half of the income received also in India means for the third person, only half we should consider. For the first 2 person, whether it is received or not, it is fully taxable for them. Now, second one, income from pension from former employee in India received in USA will come later while doing this answer. Because it's a new concept, I'll explain you while doing answer. Income from agricultural land in Pakistan brought to India. First person taxable, then next 2 person not taxable. If it is in India, exempt. Why? Because agriculture income is always exempt. Then income from property in UK and received there. So property where? UK. Received where? That is also outside. Simple. Taxable, non-taxable and non-taxable. Next, it is a continuation. Past untaxed foreign income. If you find the word called past untaxed, simple, exempt, exempt and exempt. It is not taxable in any cases. Then, gift in foreign currency from a relative received in India. So, gift from foreign currency, whatever it may be, received from whom? Relative. Relative means what? Exempt, 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 irrespective of amount. Next, determine the gross total income of Mr. Darshan for the assessment year 2020 and 2021. If he is resident, not ordinarily resident and non-resident. So as per this, business income in Paris controlled from India, received in India. You found the word received, only half is received in India. So half. Half means 160, 160 and 80,000. Done. Next, income from pension for service in India. So it is earned where? India. So there is a line. So this is actually your answer. Income from pension for service in India, 32,000, 32,000, 32,000. So in the line, it is one line down, but while writing, please write in the same row. Next, third one, agriculture income in Pakistan. So as I told you, agriculture income in India is what? Exempted, but it is where? Pakistan. How many persons taxable? 1 person taxable. Agriculture income, so it will be 40,000 exempt and exempt. We'll go to the next one. Income from property in UK received in India, not accrued in India. So it is not even received in India, it is not even accrued in India. We'll go back to your question. Income from property in UK, neither received in India nor accrued in India. We'll go back. Income from property in UK, received and there. So how much it is? 32,000. So what is your agriculture income? 40,000. Now, so your agriculture income we already taken. But what is your this one? income from property UK received in India nor accrued in India. The amount is 32,000. So it is not there. I have added. So how much it is? 32,000. Again, I'll go back. We'll see how much for this pension amount. So income from pension, that is also 32 only. Next, past untaxed foreign income. What will happen? Past untaxed foreign income always exempt. So exempt, exempt as well as exempt. So that is also done. Gift in foreign currency. As I told you, gift always what? Exempt. Why? Only three things. Below 50,000 from outsiders. Gift anything on occasion of marriage. And the third one is any relative has given irrespective of amount. It is always exempted. Now, so gift how much we should consider? So 80,000 they have given, but it is exempted. Gift received, it is non-taxable. So it is exempted. So there is a slight changes in the line. Please readjust that. Now, what is the total? Now, 1,60,000 plus 40, 2 lakh. 2,32,000 and 32, it will be 2,64,000. Hope you understood. Now, the second one, 1,60,000, 32. So it will be how much? 1,92,000. And the last one, 80 plus 32, it will be 1,12,000. Hope you understood. Again, I'll go back. Business income in Paris, controlled 2% taxable. For the third person, we will take half. Why? Because half received in India. Income from pension, all three persons are taxable. Agriculture income, it is received in Pakistan. So that's why all three are taxable. Income from property UK. So in this UK, that's why first person is taxable. Past untaxed foreign income, all three exempt. Gift, it is always exempt. Why? Because you have three rules for that. So this is all about your answer. Your answer is 2,64,000, 1,92,000 as well as 1,12,000. Now, I'll go back to your slides so that you can take screenshot. So this will be our question number 5 with 4 informations. Your question number 5 continuation. This is your answer for question number 5. So whatever the arrow mark I have given, you have to go as per that only. So this is all about your today's session. We'll come back with another 2 or 3 problems on your incidence of tax. So in the next session, we will complete all your concepts so that you can understand and work out in your homework. Thank you.